everybody. Welcome. Good to see you all live and via Zoom here. It's a real pleasure to have Arthur Patterson with us today for today's fireside chat. I think many of you know Arthur by reputation. You've heard some of my Arthur stories over the years. Arthur looms large for a lot of us and has for me. He also looms large over a lot of the build out in venture capital in Silicon Valley over the course of the last 40 plus years. It's safe to say Arthur's seen a lot of stuff from the beginning to the end. So let's dive in here, Arthur. I wanted to go back to the earlier days of Accel. You co-founded Accel with Jim Schwartz. What year was that?
End of 83.
83. I'm curious if you could talk a little bit about the 2 or 3 traits that you looked for in hiring at Accel in those early days.
You got to put it back in the context of that time. You know, I got in the venture business in 71 after working for the Treasury Department for a few years. And so Jim Schwartz and I had then had a firm as of 78 called Adler and Company. And the venture business, it was sort of, you had the Nifty 50, and in 69 you had a little hot IPO market around semiconductors, and then Nifty 50 in 72, 73.
What's Nifty 50? I don't know what Nifty 50 is.
That was when, after the bubble in 69, then there were selected 50 companies, of which Xerox and Kodak were the ones for all the institutions to own, that were the growth companies, but underneath that there was a sort of small venture business going on. It was going Heiser, that spun out of Allstate and raised a fund, which was the first fund. It was kind of $80 million fund. And he started Amdahl, among other things. It's funny, he was an investment guy, but when he formed Heiser, he hired all operating people. And then, sure enough, 2 or 3 later, he had a portfolio of companies with his guys all running them, as opposed to the investments that he'd been making for Allstate. And so in 74, the business had virtually stopped. Tandem was the only deal of note that even got done that year.
Wow.
And there were, and I actually talked the bank into letting me buy the public companies because they were there and available, and there weren't any private deals, and they were very cheap. And so it gave me a lot of experience in public market investing too. So then from 74 through the Citicorp portfolio at that point, which was sort of the index fund of the business, because we participated in a lot of the good investments, Federal Express, everything. And that was 50% underwater at that point in time. And by 78, though, that whole portfolio had compounded at 30% from 68 or 69 when they started the thing. And so that the venture business really got going in about 78. You could begin to start a new fund and raise money. No one could really before that. There were a few oddball little funds like Kleiner Perkins who were started in 72 or 3, but they didn't have any money and hardly did anything. And so so we had Adler and Company. We did about 50 deals the next 5 years, and
so you're at Adler and Company. What years? That was
78 to 83.
Okay, just before Accel.
And then we could raise off of that record. We were able to raise Accel. Back to your point about what kind of person we're looking for.
Right.
It's pretty early business, and if you depends on what you're trying to do in your portfolio in those days, and there was no growth investing going on at all. And you hire very different people for early stage investing versus later stage investing. It's just completely different business. And so we would be looking for early stage guys at that stage. And the market was in relative terms today, tiny. But most of the firms like KP and Sequoia and Mayfield got started during that 78 period.
And so Accel is a relative upstart.
Absolutely.
Yeah.
But we had the good fortune of starting a new fund at a time when the market had gotten to a scale where you could begin to specialize. When we were running Citicorp, we did all the technical deals. We also did sort of paper company buyouts and other things like that. Jim Schwartz did an oil well services company, but the number of companies by '83 had gotten to the point where you could specialize, but it's very hard for existing firms to specialize because the partners had all done a variety of. They did a medical deal, and a semiconductor deal, and a software deal, and a couple of other oddball deals, and in the portfolios. And you can't change the relationships in early stage investing between partners. You can't say one guy takes all the medical deals, one guy takes all the semi deals. So everybody else was just very spread, and so. We said, well, Bain says that people with higher market shares do best, and so let's just choose a couple of areas. Jim Schwartz had done several notable communication deals like Unger and Bass, and I'd done a few software deals as well as medical deals and semiconductor deals and everything else. And I said, I sort of like software, and so I was going to do the software. He was going to do and then we hired a third partner who was going to do medical deals a little bit later. And by virtue of focusing and only doing those deals, it then allowed you to say, now, what are going to be the best software deals, or what are going to be the best telecom deals? And we could take a much more systematic approach to thinking about the business, which other people with their portfolios all bogged down in such a variety of things across the partners really weren't in a position to do. And so we took advantage of the fact that we're a startup. We had a clean start, nothing like a clean start, and as we see every day. And so the prepared mind actually came from sort of derivatively, we were able to think about what sectors we really wanted to be in and who we should get to know and everything in a way that people previously hadn't, and that we began to articulate it as a prepared mind.
Right.
And we would say, the test of the prepared mind is that when that entrepreneur walks in the door, 90% of his business. You just haven't found that the entrepreneur is critical, and he's going to supply that critical 10% of the idea. But 90% of it, or you're not going to either bond with that entrepreneur or recognize the idea quickly and move ahead with it. And I think my best deal was. It was later, but it had been turned down by all the other venture guys who said, "Well, we might be interested, but you got to get a decent CEO in here." And because I'd been in the business and in the I'd been in the internet services business. I knew how important the billing systems were, and so I had a prepared mind that recognized the opportunity that other people got stuck on the red herrings of it's not the right management and whatnot.
Right. That was Portal.
It was Portal, 1,000 to 1.
1,000 to 1. That's better than a stick in the eye.
Right.